Welcome to Commodity Wrap Kickoff, produced by Rural Radio, Channel 147. This morning's show is live, and we're taking your calls. If you have a question, call us now at 855-RR-ON-147. That's 855-776-6147 to reach our studio. Now, here's your host.
All right, good morning. Welcome into Commodity Wrap Call-In. I am the Cow Guy, Scott Shelby. Thank you very much for joining us. We start with our guest for the morning. We'll get right to him. That's Mr. Craig Bolanos. Craig, thanks very much for being on the show. Let me see if it's you are the founder of VestGen. You're a wealth manager, and that's your new name, correct?
Yes, VestGen Wealth Partners. Yes,
I got it right.
Co-founder and a wealth advisor there. Scott, you're getting good. You said it was going to take 6 months last time we talked. I don't know. You're coming around. I can't believe there's no gigantic data, no jobs data today, no GDP data, no inflation data. Usually the 7:30 a.m. spot on a Friday is hot, but you know what's hot? NASDAQ 20,000 was hot this week. Bitcoin, when it went back above 100,000, hot again, even though it ticked down. And I don't know, I thought those Broadcom earnings were invigorating last night, telling me that the AI story is definitely not yet dead.
No, I think AI is still good. I think tech will ultimately still be good. I mean, there's going to be some people that bail, but I don't think you're going to see the there'll be some places you see the returns that you got from NVIDIA, but I think that this productivity is what's going to really help us out going forward. I've been thinking about it for a long time. I've been in the business for 38 years, and I've been asked on television about it all the time about what's going to be the next best thing for us to really get us going back to maybe a balanced budget or really be able to take care of some of our national debt. And I used to think maybe it was something in medicine, maybe technology combined with medicine. But ultimately, I think what we've had happen over the last year and a half with artificial intelligence is probably going to be the thing. The productivity, the component is just hard to argue with. So I think that's going to be good. The thing I can argue with, though, Craig, and I would like to hear what your point of view is on this, is I came out in a scathing monologue to begin my show yesterday about the Fed, and clearly, to me, they've abandoned their 2% inflation target. They should probably just come out and say it's between 3 and 4%. We all know we need to inflate our way out of this debt. There's no way on God's green earth that they should be cutting rates with the PPI and CPI that we got this week, but they're going to because they don't care. The honey badger doesn't care anymore. They want to see the growth, and they've decided to vote for growth over taming inflation. Now, that's something we're going to have to get used to because I think we're going to have inflation to inflate our way out of our debt, but I think that the Fed needs to be a little bit more, at least call it what it is, and stop saying that we're going to be trying to tame inflation when we're really going for growth. We're going to have to let inflation run to help us out of our problems. What say you?
You know what? I feel like we've been having the same conversation since the spring of 2023, Scott. No one thinks we're actually getting to 2%. The CPI coming in 0.3% month over month, 2.7 year over year. Inflation's kind of arrested here. I think it's going to be really tough to get to 2. And you're carping and complaining because you're saying to yourself, wait, how is there a 96% chance of another Fed rate cut in December on the 18th when you can't get inflation anywhere near the 2% target? Well, that's because 2% is not the real target. Clearly, there's a bigger agenda at hand, which is let's inflate our way out of the problem. Let's preserve the wealth effect. And one of these days, someone will get around to telling the truth. They'll just do it through the mouthpiece. They'll let it go through the Wall Street Journal first.
It'll be
then
me.
They'll float it on some news wires, but I don't see it happening anytime soon.
It'll be me. I said it yesterday. And I think the stocks rip if they say, you know what, we can't get to 2%, we're going to go to 3 to 4%. That's our new target. I mean, and you know what? That doesn't mean, look, go back to the 90s. I remember trading in the 90s. Look, we had, higher yields than we do today as far as, say, even the 10-year goes, but we still had decent returns in the stock market. So you can have, and even Deutsche Bank came out with it last week. They see the 10-year yield, which is 4.35, 34 today. I don't know what I checked earlier this morning. They expect to see that 10-year yield around 475 to 480 all year next year, but they still think we could see 15% added on in the S&P. So that's what folks are looking at, and I think that that's probably the case because you're going to have that 10-year higher because I think we're going to have inflation. I mean, with what we got yesterday, and to see that expectation of an interest rate cut go up after what we had from the PPI yesterday tells me that A, I'm either past it and I don't know what I'm talking about, or B, the tail is wagging the dog, and I think it's B.
It might just be B. It might be B. I would love to be your counterpoint and be your muse today. It's just tough to do because armed with information that's based on nothing more subtle than truth and fact, no, it just kind of is what it is, right? But listen, I'm a happy guy. I mean, I've seen not one, not two, three of these large inflationary resets since I've been born, and you can't do anything about it. It's all 30% permanently more expensive. But if you tell me I'm going to operate in an environment going forward that's potentially plus or minus sub 3 year-over-year inflation changes, as long as we can have real wage growth above that level, you know what?
I'll take it. I get it.
Seems pretty much like Goldilocks. I'm going to take it. So maybe the question investors should be asking themselves is, are we back in 1995? Or are we in 1999? And I think the weight of evidence is we might just be in 1995. And since you mentioned you were trading back then, Scott, what happened in 95 and 96 and 97 and 98 and 99? It was a good time, wasn't it?
Anything with a .com on it, that was for sure. And by the way, I'll add, I was trading in 88, 89, so you could go even further. But I appreciate you coming on a Friday morning, getting us started. I want to remind everybody that it's Commodity Rep call-in day today. You can either call or text, and the number is 855-776-6147. That's 855-776-6147. We want to hear what you have to say. This is when you get to do it. You can text us if you're a little bit apprehensive about putting your voice on the air. And that's the same number, 855-776-6147, 855-776-6147. We appreciate Craig getting up early on a Friday morning with us. We're going to go away. We're going to pay some bills, and hopefully somebody gives us a call or text between now and then.